Okay, all right, good. Everybody can see and hear, right? All right, where are we? I guess I gotta start from scratch. Okay, we were looking at, well, the first thing I was looking at was, oh, look, this reset too. Anyway, so the markets are selling off, and part of that reason is because the Trump just had a meltdown on television. You know, look, I'm not a Trump fan. Oh, I screwed up also. I apologize for this too. Since 10:30 this morning, I've been chatting in Tuesday's chat. So everything I've been writing has been coming out over here in Tuesday's post. And I don't know what the hell happened. You know, it's anyway, because he asked that it was May 22nd when I put it on. I answered his question, and I don't know, like I don't know what happened. I never do that, but this is like, because my main screen, I always leave it on today's date to make sure I don't do exactly what I just did, which is I started chatting. I chatted in the wrong box, so I was talking during the thing. The thing that got me though, first of all, the oil inventories we'll talk about next. The thing that's killing us though is he went nuts and started going crazy on the White House lawn. But it started before the White House lawn because Trump had an infrastructure meeting scheduled with the Democrats, the House and Senate Democrats. So they all go to this meeting, but instead of having a meeting, he stands there. They don't even sit down, and he says, "We're not doing anything unless you agree to drop the investigation." And obviously they're not prepared for this at all. So he's like, so they're like, no, that's not happening. And look, you have to understand, I don't like Donald Trump, obviously, but you have to understand this investigation isn't just about him. The Russians, the Mueller report, which Trump is citing, is saying no collusion. First of all, it cites 10 counts of obstruction of justice on the president's part. These aren't kind of obstruction or anything like that. These are 10 times Donald Trump obstructed the investigation. The determination as to whether it's a crime or not is left up to Congress, who are the people who determine whether or not the president committed a crime in an impeachment proceeding. That's what Mueller's report said. Collusion. There was plenty of collusion. They just couldn't find any specific evidence linking the president to the collusion. But the main part of the other part of the investigation that didn't have anything to do with Trump was the first half of the report. That was all about how Russia clearly interfered with the United States' elections in 2016 on behalf of Donald Trump. They can't prove that they did it for Donald Trump specifically, that Trump asked them to do it, but they did do it for Donald Trump. The only thing they can't do is prove that Donald Trump first said, could you please interfere with the elections to get me elected? So, and then I'll do you a favor. That would be the collusion that they can't prove directly because they don't have that conversation. And then Trump at this thing was waving around phone records and things and whatever. It was like a really insane conference he gave. Anyway, so as an American, I don't care if you like Donald Trump or you don't like Donald Trump, you do not want an investigation dropped where we're trying to find out how the Russians interfered with the US elections in 2016. They probably interfered with them in 2018, and they will again in 2020. So if you want to just like live in a land where your elections are dictated by Russia, that's the only reason you want to drop this stuff. This is insane. They attacked our entire system of democracy. We're going to close the investigation and take no action. Of course you got to interview people. Of course you got to talk about it. Anyway, so the thing is though that Trump gave this ultimatum, but he obviously intended to walk out. He wasn't intending to do anything but have this conference, because look at this, he has a little sign made up and a stand made for the signs. He's got a sign and it's on a stand and he's got the little thing that says 35 million spent, subpoenas, number of days, number of something, 18 angry Democrats, no collusion, no obstruction. He didn't make that up on the way from the meeting through the House Speaker. He didn't leave the meeting room and on the way past a little sign shop. I mean, this was planned before it happened, obviously. The whole thing was a big stunt by him. He never intended to have an infrastructure conference. This is insane. Our government is falling apart. This guy is holding up government business so that he can get out of his little criminal investigation. And that's because he's guilty. You don't do that when you're not guilty. You do that when you're guilty. He definitely did stuff, and people close to him are involved in stuff. His son's probably going to go to jail. So yeah, I mean, I can understand doing anything you can to keep your son out of jail, but that's where you impeach somebody, right? That's the reason you have an impeachment proceeding, because you can't have a president who places his son above the country. You can understand why he would do that, but that means he's not fit to be the president. You can have sympathy for him because maybe he didn't do it. Maybe it was Don Jr. Maybe it was Eric. Although Eric obviously doesn't seem smart enough to do it, but it's fine. So it wasn't Trump. It was somebody very close to Trump, and they're going to be in big trouble. Even if you believe it wasn't Trump and it was somebody close to Trump, he still can't interfere with the investigation. Okay, just like Jon Snow, I don't want to do a spoiler, just like Jon Snow had to kill somebody he cared about, it's in Game of Thrones. I mean, it's if you're going to be the leader, you have to deal with what happens. You can't just say, okay, because I'm the leader, I'm in a position to make it all go away, because it's not really going away. What you're doing if you make it go away is you're leaving the door open for us to be attacked by Russia. We can't do that. So seriously, I mean, as I watched that, this is what I wrote. I would sell everything, get out of the country. That's it. We're done. This is a dysfunctional government. It's collapsing. This guy's going to be indicted. We're going to have he's forcing an impeachment. There's no other way around it. You can't do this. You can't give ultimatums and shut the government down. And he already shut the government down for 35 days so he can get his freaking wall. That just happened. So you already know what this guy will do to get what he wants. He doesn't care. He doesn't care about the people. He doesn't care about the country. He only cares about getting what he wants. So if you can like the guy, I don't care if you like the guy, but you gotta like America better. This is a freaking disaster. And that's why the market started turning lower after he gave this little speech. And it's a tough one. Anyway, so getting to my other problem. So meanwhile, none of this was good for we have that terrible inventory report also. Let's talk about that next. Oh man. I wanted to catch this bottom and I missed it because I want to see a 195. All right, well, I have two short. My average is 198. If I get another one here, my average will be closer to 197. I wanted to get 30 now. See, I wanted to get a 30% lower. I don't know if I should be greedy here. What's oil doing? Let's take a look at oil. If oil is holding 61, I really gotta. Yeah, see, oil's holding 61. I don't think I'm gonna get a lower price. Nope. Ow, don't get away. No, stop. Ow. Oh, I'm very annoyed. Okay. I'm not going to add unless I get a good price. End of story. I mean, it's because it's only 3 cents away. It's not a big deal. Here's what I think is happening. Let's say I know what's happening. But the oil report, we have this. Okay, so where is my EIA number? Okay, well, let's see if anybody has a question before I start. The URI is Terrific Tuesday. Maybe that's where the entry issues are. Not sure how CMS works, and unsure if there's an association with the article in the comments for that. No, Owen. It's me. I screwed up. Okay, because I accidentally got on the Tuesday post right here. I know what you're saying right here. I got on the Tuesday post and started commenting at 10:30. This was a holdover from the morning, this was a holdover before I printed the morning post. Somebody made a comment at 8:30 about that. Okay, I actually, I don't know what happened there. I remember answering that question specifically, so I'm not sure. Anyway, all right, anyway, so bottom line is this was Tuesdays. I should have been commenting on Wednesdays. Wednesdays over here. I did make my initial comment on Wednesday here. See, and I answered your part. This is, I think, where I started getting confused because he asked the same question twice. See, I'm going to blame you part for this whole thing. He asked that same question again here. I answered his question specifically here. And I think that's why when I went to Tuesday's post and I saw that comment, I remembered answering it, and it didn't occur to me I was on the wrong post. I think that's really what it was. Is that when I think looking here, I looked back to see what we were doing yesterday. I saw his comment, and somehow in my mind, since it was the same comment, I kind of like didn't occur to me to flip back to the normal chat. Like I didn't feel like I was on a different chat room. Anyway, it doesn't matter. So it's not a thing that would ever usually happen. It's an incredible coincidence that he wrote the same comment and it was in the same position, the last comment made to me on both posts, and that it caused me not to realize I was on the wrong post when I was looking at the comments. And then I just kept going along on Tuesday's post, just kept talking and talking and talking, and nobody was answering. And I started wondering where everybody was. And I was like, what happened to you people? So anyway, really messed up though. So where was it? All right, so there's no questions. So let's talk about the inventory report. Okay, so API, regardless of where the comment actually is. Oh yeah. Oh, okay. Owen says I'm the first time participant. It's fine, Owen. No, I appreciate it. I understand what you're saying about the URL. It would have been helpful if that was what it was, but it's not. It was just stupidity on my part. I got mixed up. Anyhow, so at 10:30, me thinking everybody was on the section, when the inventory report came out, it was worse than the API report because the API report showed, I don't remember, it was like, I think it had the same kind of drawer in gasoline in oil, but gasoline and distillates were both mild. I think gasoline barely had a drawer and distillates had a million or something like that. Anyway, so RB went down to 199.88 and RBN dropped to 1975, and I said I'll let it settle, but I'm inclined to double down. I was at 199.24. I doubled down to 197, and that gave me 2 at 198.155. Fine. So now they're down now they're down for the total. They're down $2,100 overall. I would have loved to have doubled down here because I'd be almost on my way back to even. Okay, I'm sorry. So why am I doubling down? Okay, this is not good, obviously. But you look at the weekly report. What's our premise? Our premise is we expect to draw before the holiday. When does this oil report come in? It comes in May 17th. Okay, May 17th was last Friday. Okay, and I'm not sure why. I could have sworn these things usually get to Sunday, so it's kind of weird. But May 17th was Friday, and I was trying to explain in the webinar before, but I'll just say it from scratch. It doesn't matter. Gas stations don't fill up their tanks every week. They have those great big giant trucks that come. You know this, but if you have local gas stations by you, right? You see them all the time. They don't very often have a great big giant truck filling them up, and it takes a long time for them to get filled up. It happens intermittently. Once every 2 weeks, 3 weeks, 4 weeks, depends on how busy the gas station is. One of these big giant trucks comes by and fill them up, and they have huge tanks underground that they fill up. And before a holiday, they generally like to top off. But if I own a gas station and I want to top off before a holiday, I don't want to top off a week before the holiday, a week before the week before the holiday. The holiday's all the way out here. This is the actual day. So these days, I'm not going to fill up here and wait 2 weeks until the real demand comes in. Because when's my demand going to be? My demand's going to be people filling up before the holiday and people filling up when they come back from the holiday. They're either going to fill their gas up when they go away, before they go away, or they're going to fill it up when they come back. One way or another, they're going to need some gas. So this is what a gas station owner feels will be the peak demand. The 21st to the 29th would be your peak demand for gas. So they want to top off their tank here in this week, not down here. So, you know, they're scheduling their trucks for these days, actually, maybe Friday, but Friday, Saturday, Sunday, they want to have, during this week, they want to be filled up if it's possible and topped off. Also, if the prices spike up, it's unattractive for them to fill up their gas. They also play a little bit of a what do you call it, game? They're hedging a little bit, basically, because what they do is they look at the prices, and you see what happened here is like coming into the 17th, there was kind of a big bump up, so that's going to discourage them also from filling up their tanks. Okay, they like to fill them up here, but they don't want to fill it up here, and then now they're going to be excited to fill it up again if they get a chance. I'm not sure what the lead time is on calling for a truck and so on and so forth, but that's a big difference. That's a huge amount of margin for these guys. So what we got, so what we have now is we're back to the lows, which is, again, I'm confident investing down here. Nothing Trump does or says has any direct effect on how much gasoline is going to be used by the US in the next 2 weeks. That's unrealistic. Whoops. So nothing has actually changed, and here we go, see? So nothing actually changed, and it's just a matter of now we have to wait. And also these July contracts that we have until, you know, the July 4th holiday is another chance. But what I think is going to happen is that we're going to see the demand that we expected, but it just isn't going to come now before the holiday. It's going to come next week when that inventory report comes out. We're going to suddenly see draws, and all of a sudden everyone's going to go, oh my God, look at the demand, and boom. So that's what I think is going to happen, and enough so that I'm not willing to get out of the contracts or anything like that. Now, let's take a closer look and see if anything weird is in the inventories. Make this a bit bigger for you guys. So overall, we have a net one. Whoa, there is a net 15 million barrel build from last week. What the frick? Well, obviously all other oils. Yeah. Wait. No. What? Am I reading something wrong? This can't be right. 46 to 44, that's a draw from the SPR, from the Strategic Petroleum Reserve. 47 to 31 is a 16 million barrel draw in other oils. Look at these wacky numbers. But how could this then be a build if this is a draw? Wow, dudes. Am I crazy? I can easily be crazy. So who's on top of this? Anybody got a better handle on this than me? No. Hang on. Let's do this the old-fashioned way. 477, let's call it, 229 plus 126 plus 432 plus, I'm rounding, of course, 645. 645 plus, it's wrong. Oh my God. It's all wrong. The whole fucking report is wrong. Total motor gasoline inventories increased by 3.7 million for the week ending May 17th. Oil inventory 476, that's the correct number. It's wrong. This number is this number is 4.8 million. This number is 3.7 million billed in gasoline, correct. This number is a billed in distillates of 800,000, that's correct also. This number, though, is a tremendous draw in all other oils, and God knows what the cause of that is. So you know, well, the oil numbers, I mean, these numbers are correct, but the picture is very, very different because there's been a this doesn't add up. It's 1909, not 1916. I have never seen anything like that before. You know, I'm sorry, you know, in my mind, it seemed wrong. I just had to figure out what was going on. 472 plus 225 plus 125 plus 448 plus 646, 1916. And I think it's just 476, oh no, well, sorry, plus 229 plus 126 plus 432 plus 645, 1908. It's off by a mile. It's off by 23 million barrels. Now, it's possible, it's unlikely though, since this number checks out, right? It's unlikely that this number should be here because this number was right and it's last week's numbers. So it's most likely that somebody just did this wrong, that they must have looked at something wrong, they must have done something wrong. This is a huge difference though. So we now know something nobody else knows. We know that there was a much bigger draw in overall product than they think in total oil storage, which they look at. It said in fact here, where did it say that? Total product supply, past 4 weeks, something, gasoline production, distillate fuel production, total motor gasoline. I don't know. Anyway, there was somebody was saying something about there being that we were at the high period for the 5-year average, but it was only by about 5 million barrels. This is a big difference, though. This is a 20 million barrel difference. We're 15 million barrels below, not 5 million barrels above the 5-year average of total oil. This number is wrong by a mile. I've never ever seen that happen before. So there's problem number one. Problem number two. Look how little imports we're doing. We are importing 1.5 million barrels a day less than we imported last year, but we're shipping out more than we exported last year. So we're importing 1.5 million barrels a day, and there are 7 days in the week. So it's 1.5 times 7, 10.5 million barrels a week less oil is being imported, and we are exporting 2.7 times 7. We're exporting 18.9. That's insane. So for one thing, what it means is that there's a lot less demand in the United States than they tell you because we're exporting. That seems like demand. We're producing the gasoline, and we're shipping it out of the country. It's not for US drivers, we're shipping it out. And the distillate, so the gasoline production is even less than last year. In fact, the distillate production is less than last year, and all other products are significantly less than last year. And the total production is less than last year by quite a lot, by 500,000 barrels a day. We're making 3.5 million less barrels a week than we did a year ago, and 500,000 less than we did a week ago. That's really interesting. I'm sorry, not 500,000. That's like 200,000. So that would be 1.4 million less barrels per week that we are producing in the middle of the busiest season when people are doing usually things. Where's utilization? There's a utilization number somewhere. Refinery utilization. Yeah, see, that's down too. That's what I figured. Because refinery utilization is off by quite a bit also, and that's why you're having this number. So for whatever reason, we've got refineries offline, something's going on, but this is a real mess. Meanwhile, oil is significantly lower than it was last year by 15%. Gasoline, unfortunately, though, is not. Gasoline is right about the same price. So if anything, I mean, gasoline is way overpriced to oil. So it's certainly not a long-term bet. I mean, once the holidays are done, I'd be shorting the crap out of both oil and gasoline. But, and like I said earlier, did I write it? If I wrote it, it's in the wrong post. But anyway, there's no logical connection, even though you say, look at the inventories, look at this and that. But the bottom line is, look, first of all, it's a great time to go long on oil because there's definitely more demand than there's seen. So I'm willing to take a shot over here at 61, but I already have my bet on gasoline, so I'm not gonna. But I think 61 should hold on oil. And it's a good long bet, again, into the holidays. And you make a couple, if you make a buck, it's $1,000 and get out. But I already have my gasoline bet and I'm waiting to double down on that. So I don't want to spend my money on oil if I've already got a bet basically on the exact same thing. But that's just that's crazy. And that report is way less bearish than it seems if the numbers are the way we're reading them. I don't know if anybody sees anything different. Wait, a footnote. There's a footnote that the Northeast was not included. What? You're killing me, Rick. What? Distillate fuel oil stocks in the Northeast Heating Oil Reserve are not included, and that would be note number 1. Well, where's note number 1? Where is footnote 1? What the frick? It's an addendum on the chart. So we have to look for a 1 that corresponds. See, these have 2 3s. How do they have 3s when they, wait, this has a 2. There is no, what is this? Who makes these charts? What is this, high school? There's a 2, but there's no 2 down here. I don't know. Something is very, 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 very messed up. And I've never seen numbers don't add up. I've never seen that. I can't even imagine. It's supposed to be like a spreadsheet. It's it's weird that I could look at a set of numbers like that, but I did. I looked at that set of numbers and it just seemed wrong to me. But what are you going to do about it now? It's the only thing I can say is I'm very confident hanging on to my longs. I think there's been a big mistake somewhere. Really, really weird. And I wonder who would be able to tell me anything about this. That's one of the weirdest things I've ever seen. Anyway, so the bottom line is, all right, to recap, the timing of the report, regardless of what the numbers are, the timing of the report to me is not reflecting the holiday demand for gasoline. And therefore, I believe that the drop in gasoline, forgetting the fact that these numbers are, the gasoline number is right, the oil number is right, these numbers seem to be correct, but the total draw in product tells more of the story. The fact that all other oils depleted by so many barrels, it means the refiners were making a lot of these other oils. And it's hard to say why, or it's just or not they weren't making there's demand for it. But what that's going to do is obviously they have to replenish at some point, so there's going to be a turnaround. It's really weird, but anyway, demand should come back this week, and that means that next week, starting with the API report, we should see something interesting. Oh, now the Fed minutes are out. Jesus Christ. All right. The Fed, a patient approach to rates appropriate for some time. I don't think there's anything shocking in the Fed notes. So I'm not there. I mean, I'll read the whole thing. That's all it says. That's the entire headline analysis for CNBC. Patient approach to rates appropriate for some time. And that just means low rates for longer. So let's go to the Fed. What a busy day. All right, Fed, FOMC minutes. When is this from? May 1st? That's not the one. La da 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 da. Minutes. So this is from May 1st, so it's not that much later. La 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 la. Wow, look at these people that go to this meeting. Holy crap. Are all these people actually there? Where would they even sit? I've been to the Fed. The conference table's not that big. All right, by unanimous vote, the committee selected Paulson to be an associate economist. Balance sheet normalization. They resumed the discussion. Illustrated gradual acceleration past the long-run target portfolio, blah, blah, blah. In the statement regarding monetary policy and balance sheet, the committee noted it's prepared to adjust the size and composition of the balance sheet to attain the objective. In a scenario where the funds rate is constrained by the lower effective bound, against this backdrop, participants discuss the benefit and cost of alternative long-run target portfolio compositions. Oh, this is so wonky. In the discussions for shorter maturity portfolio, many participants reducing capacity, these financial conditions, number of participants. So they see they see their balance sheet adjustments as being a sort of like a lever, a gas pedal that they can go on and off and sort of like make fine tuning to the economy as it goes along. Obviously they can because it's $4.5 trillion still. So they have a huge amount of it. Fed says there's very little sign of inflation. They're in the lower bounds. They're still slack in the economy, basically. It's hard to say. I don't know if that's true, though. I mean, there's really, people have trouble hiring people. In fact, let's see what it says here. Current staff estimates, term premium, oh, that's different staff. Committee statements regarding, okay, this is still all about that crap. Transition to the line of the portfolio. Several participants expressed the view the decision regarding the long-run portfolio would not need to be made for some time. A couple of participants highlighted the importance of making a decision in the context of review of penalties. Okay. More? God, oh, no wonder there's so many people at this meeting. They were projected to exceed that they're exceeding the $20 billion redemption cap by a modest amount sometime this summer. They're going to be redeeming 15 billion, down from 30 billion. So they're basically easing up a little bit because they're worried about the economy being shaky. They're being very, very patient. They're being very standoffish. All right, economic situation. This I care about. So, labor market is strong. GDP increases a solid rate. I don't see how they can say that when the Atlanta Fed ratcheted down. They cut 50% off the GDP for that. Business fixed investment, since about a month ago, they've cut 50% off the GDP expectations on the GDP now forecast. Business fixed investment rose more slowly in the first quarter. Consumer price inflation, measured by the 12-month percentage change, net was moved below 2%, and the surveys and alarming inflation. Non-farm payroll recorded strong gains in March. Unemployment was steady. Labor force participation declined a little. Employment to population ratio edged down. So in other words, less people are actually employed. It means less people looking for work. Now that's not necessarily bad, because what it means in some context is it means that you know, if your wife had to work, even though you guys have a baby, now you've got a better job and you can afford to have her stay home or something like that. You know, it's not always about that everybody has to work. And in fact, frankly, the history of this country for the last 100 years has been that we've gone from 90% of the people working, you know, where like every single person on a farm got up and worked during the day, and kids went to work at factories and things like that. And they, you know, like very young kids went to work at factories, and kids delivered newspapers. I mean, everybody had a job. Everybody who could work basically back in the 1900s. And now 165 million out of 320. So basically half the country works and half the country doesn't work. So it only takes half the country to support the whole country. So the history of this country in the last 100 years is every 10 years, 5% less people work. That's normal. So it's not, you know, people act like that's a bad thing. It's not a bad thing. And eventually it's going to be like the Jetsons, where one guy goes to the office and presses a button, all the machines turn on, and that's the whole company. That's the whole factory. Is that good? I don't know if that's good. I'm not sure what the heck everybody else does for a living. Apparently George Jetson's family shops a lot. So they're often shopping. So I guess that's what they do. They hang out, they've got robot servants, and they have a good time. So it's all right. Whether we're going to have that kind of utopia or not, I'm not sure. Let's see. The share of workers employed part-time for economic edged up in March, but still at the lows. The positive sector job openings in February declined slightly from the elevated levels. The rate of quits was at an unchanged level. See, rate of quits is important because that means how many people are going to be demanding better salaries. The more people that quit their job or feel comfortable quitting their job, is it puts pressure on wages. 4-week moving average of initial claims for unemployment was historically low. Average hourly earnings rose 3.2% over 12 months, keep in mind. So you're 1.2% ahead of inflation, basically. This is what they worry about, but they don't like to see too much wage inflation. That leads to real inflation. The employment cost index in the private sector increased 2.8% over 12 months, and they don't like that either, because they don't want the Fed's running this thing for the benefit of the oligarchs. They're not running it for the people who are getting paid. Industrial production edged down in March for the quarter overall. Manufacturing output decreased slightly. Saying, you know, these are not total positives. So this is why the Fed's being very cautious. Mining output declined on net. Automakers' assembly schedules suggested that the production of motor vehicles will move up in the near term. New orders indexes from the regional manufacturing pointed to modest gains. However, industry news indicated they know Boeing screwed up and they're going to have a big problem next quarter. Consumer expenditures slowed in the first quarter, but monthly data suggested some improvement. Real PCE increased, partly due to a delay in tax refunds. Partial government shutdown, of course, infected us. Sales of motor vehicles rose sharply in March. The average pace of sales was slower. Key factors influenced spending, including low unemployment, ongoing compensation, still elevated measures of net worth, were supportive of near-term gains in consumer expenditures. I don't know about that. In addition, consumer sentiment was measured by the Michigan, edged down, still upbeat. The staff reported preliminary analysis. Household wealth is getting better. Basically, it's a good report. It's a generally strong economy where there are some things they'd like to see better, but nothing particularly that they're worried about inflationary. So why would they raise rates? That's the gist of this report, is why raise rates. There's no pressure on the Fed to raise rates, even though, other than the fact that the rates are historically low, but then the question is, if the rates weren't this low, what would happen to the economy? But then why should they want to find out? You know, it's not a science experiment. It's like they want the economy to be going just basically the way it is. So they don't, if it's going the way you want it to go, you don't change it. It's like when you're driving on the highway and you're going straight and the road is straight and the car is straight, you don't turn the wheel. You don't change the gas, you don't change the brakes, you don't do it. You just keep driving. That's what the Fed's doing. They're just driving. Trade deficit, blah, blah, consumer prices. They think they're not measuring certain things. That's beside the point. Foreign economic growth in the first quarter was mixed. There's nothing exciting here. This is a very boring report. So anyway, so the bottom line is the Fed has no reason at all to raise rates. That's where they are. So given that they have no reason to raise rates, that's generally more bullish for the market, but there's so many other, there's very scary things happening. It makes it very hard to be bullish. LB. Okay. YM. Why are you not bringing up the Dow chart? What's so hard about that? Okay. We're turning generally up a bit. Oil's coming off the lows. Brent's coming off the low. Brent, it hit 70.50. I thought it hit 70. I was going to say 70 is like a no-brainer for a bounce. All right, and we're coming up a bit here. So oil is fine. Natural gas is still a great play down here with 255. We play, are we on NGZ? Is that what we're at, 19? Yeah, we're at NGZ 19 at 286. And yeah, and you can easily get it run up to $3. It's for $1,400. You can easily get it pop back to $3. So I like that one a lot. NGZ takes you right to like December, so you go all the way through hurricane season. Many possible ways that you can get some money off that. And like I said this morning in the post, the natural gas, it's so crazy because we just had an order placed for 10% of our natural gas. One company just bought 10% of the United States' total output of natural gas. As one order for shipping overseas. We're going to have many of these orders. And so a lot of our natural gas is going to start getting shipped out of the country. And, yeah, it's a year, 2 years away, but there's a general trend there that's going to be up. We're going to be using a lot more natural gas. Now, obviously, people are going to start producing a lot more natural gas, too. So the question is, what's going to come first? But I think there'll be times where there's oversupply, because there's more being produced than the demand, and then there'll be a big demand, and then they'll shrink down again. But overall, you got to look at global consumption. The global prices of natural gas are still in the $6 range on the average. So the global average is still $6, and we're selling natural gas for $2.50. So therefore, as much gas as that people can buy from the United States, they're going to keep placing these orders until the prices equalize. It's like, sure, there's gas in Russia and there's gas in China and so on and so forth, but it's $6 gas. People want, if you can ship liquefied natural gas from America at a lower price, people are going to buy. Now it costs about $1 to ship it, so it's really hitting the water at $3.50. So keep that in mind. The process of liquefying the natural gas and putting it on a ship and deliquefying it at the other end adds about $1 to the process. So that's why I think the break-even point on gas is about $4. It's not like we're going to, for us, it's going to be $4. So we're going to go up to $4 roughly. They're going to come down. The rest of the world's going to come down from 6 to 4. So we're going from 250 to 4. We'll go up $1.50. They're going to come down from 6 to 5 or maybe 4, because by the time we ship it at 4 on, if we're selling the gas for 4, it means we're landing it for 5. So I think globally, 450 is probably where it's all going to settle out, which is going to be 350 for us plus the liquefaction cost. So, but before that happens, I'm sure we're going to see it for $4 at some point. So at some point, we'll get up to $4 on natural gas. But then the world, then you're into a global demand picture. And frankly, from there, I would not be bullish at all. Because once we're up at that level, then there's going to be more incentive for more people to produce natural gas in America. There's going to be more people liquefying the natural gas in other countries to make sure they have the ability to ship it as well. And that's going to cause more people to drill for more natural gas. There's a lot of natural gas in the world. So, you know, once you start tapping it all in, price is going to settle back down lower. And honestly, all these people who've spent all these billions and billions of dollars on shipping terminals are going to probably have big trouble making their money. But that's still a problem for 5 years from now, not a problem. You know, eventually it will be a problem. I wouldn't want to own one of those things as a lifetime investment, but you know, for the next 5 years, it should be bullish. All right, so we got through that part. Sorry I had such a rocky start. LB way down $1.04 and some of the other retailers are we announced after the close today. Yeah, we'll see. This is that big chance for LB. And hopefully they don't screw up. I mean, they're just down with everybody else. Retailing is so looked down upon. I mean, Nordstrom just had terrible numbers. And but Target had great numbers. Now, Target obviously has nothing to do with limited brands. That's, you know, Victoria's Secret and Target are not the same thing at all. And Victoria's Secret, and Target and Nordstrom are not the same thing at all. But it's not necessarily a very good sign when you see Target, who's the discount, doing very well, and you see Nordstrom's doing very poorly. You might start to wonder about the premise that the U.S. consumers are in such great shape because they're not going up market. All right, now I don't frankly, you know, I mean, I'm a Bloomingdale's guy. I go to Bloomingdale's all the time. I like Bloomingdale's. Yeah, and I shop mostly at Macy's and Bloomingdale's. I'm not particularly price conscious when I'm buying stuff, but I won't go to Nordstrom's because they're insane with their prices. I won't go to Saks either in New York. But Macy's and Bloomingdale's is the same company. They're owned by the same people. What do I want to say? So I like it because there's less people there. That's why I like to go to Macy's and Nordstrom's. I like it because I can look around and see and find a person in 2 seconds, and that person is going to help me and get me what I want. And they have good return policies. And I'm not saying that the other stores don't, but I just like the fact that I can walk in, talk to a salesperson, get what I want, and walk out. And the whole thing takes about 15, 20 minutes of my time if I want to get something. That's not my experience when I go to Target or Sears or any. Well, Sears isn't even a thing anymore. But the cheaper, the cheaper department stores. So I'm willing to pay for the service that you get in a place like that. Even Macy's. And Macy's is frankly, I think when I go with the kids, we mostly go to Macy's first. But if we can't find something Macy's, we'll go to Bloomingdale's. But they like going to Old Navy too. I mean, my kids love Old Navy, and I'm like, fine. I was thinking very funny way. They're not so much anymore, but when they were younger, they used to be like, they used to be, oh, can I get 2 tops? It's like, I like both of these, and it's Old Navy. I'm like, yeah. I'm like, you can get 50 tops at Old Navy, like $1 each. It's a crazy store, man. I don't know how they make money. That's part of it, and they're owned by the Gap. But Old Navy is unbelievably cheap. So anyway, but my observation of department stores, and by the way, when I go to malls, I tend to walk, like I go through all the stores to see how everyone's doing. My observation of department stores is they're all dead. they are really hurting, and some of them have done better than others of pushing their web thing. But yeah, I mean, online sales is really hurting these things, and it's difficult because the commitment to the space. I mean, that's what Amazon doesn't have. Amazon doesn't have that overhead of having all these stores and paying all this rent and having all these people standing around doing nothing. It's really hurting the department stores, but not Target, because Target operates on volume. They're not, and see, that's the thing about Target. Target's not like Walmart. They're not like Costco. They don't charge the least, but they charge good prices, and it's a nicely put together store. They really are neat. It's like the stuff is not crap. And they're very smart, because they always have Starbucks in the stores or something like that. And pizza. I think generally they have Starbucks and pizza in their stores. So my kids like going there. I'm not saying now they're in college, so their tastes have changed. But when they were younger, that matters a lot, though. When you have young kids, it matters where they want to go. And my kids love going to Target. And they didn't like Target. They loved Target. It was a trip was going to be to the mall or to Target, but those were equally fine with my kids. They were very happy to go to Target, and that was their day. That was going to be their time out to go somewhere. And I'm saying, you want to go to the mall, you want to go to Target, it depends what they're buying, but they have different tastes. Jackie is into makeup and stuff, and she loves Target. They have a great selection of everything she wants there. When we go to Target, I buy food. While the girls are doing their girl stuff, I'm buying food. They got really good prices on food, and it's good food. There's nothing wrong. It's all the same good stuff you get in a grocery store. And I'm a Whole Foods snob, so it's a pretty good place. Anyway, so retail on the whole is some people are adapting to the new model, which is much more of a web-oriented model, and some people aren't. And it's even the successful ones, it's going to be rough. Like Macy's is closing 10% of their stores. Other people are pulling back. Sears, well, they're not dead yet, but I mean, Sears was renting out space to Dave & Buster's and things like that. They were cutting back on their rents by saying, you know what, we only need half of the store for what we're doing now. Other stores aren't quite there yet, but they're all going to get there. They're going to start putting more restaurants inside the stores and more pop-up shops inside the stores to the extent that they can. I think if the malls allowed them, I think they'd probably do more of it, but I'm sure there's contracts that the malls have that say you can't have competing this or competing that. But I think probably the best model for a department store is to have a sort of almost a bazaar model, is let small vendors set up shops in the store. That would be, that way the store would take a responsibility for their quality and for their returns and so on and so forth. But the vendors would be there and have these little pop-up shops, which is something who does it? Best Buy. Best Buy does that with the Apple section and so on and so forth. They have the vendor set up a little shop inside their store, and that then that helps them out with the rent on the store. It also adds people that are the vendors' people, not their people, staffing the place. And the expertise is there, and they move products, and they make just about the same as they would make if they have their own people selling stuff. So it works out for them. Everybody's got to adapt a little bit. And the question is, who's adapting and how well are they doing it? And I like Limited Brands is Victoria's Secret basically, and Bed Bath & Body Works is the other part of that company. Bed Bath & Body Works is that little candle store, which is a booming business, candles and scents. And that's a huge business. It's like every kid gets that for their parents for their mothers for Mother's Day. And people just seem to buy it. I don't get it. But people really like those scents and candles and whatever, so that's fine. So that's actually doing a pretty good growth job in that part of the business. Now, on the Victoria's Secret side, it's a little weird because kids today, younger kids and whatever, they're not into the super nice bras and panties and things like Victoria's Secret, but they do love pink. Pink is the kids brand of Victoria's Secret, and that's huge, and that's what they stick with. I don't know though if they're pulling off the transition from pink to Victoria's Secret, because it's still a pretty drastic transition. Like you're basically going from yoga pants and sweatpants to, in sports bras to frilly stuff. And I don't see that that's getting pulled off anymore. And I think there's a mistake that Victoria's Secret is making in that they don't embrace the ordinary stuff that they should. I mean, they if I were them, I would go make the best freaking bras and whatever's and panties that are normal. It doesn't have to be lacy and frilly and so on and so forth. I think that's not as big of a thing as it used to be. So we'll see, but we'll see how they're doing. But the bottom line is that they are making efforts. They are turning things around. Last year, they've got easy, to me, they have easy comps for last year, because last year they had just cut 2 lines. They cut the bathing suit line and they cut something else, and they were transitioning. So I think that hurt their sales last year, and I don't see why they wouldn't hit their numbers this year. I think they're just in a very big turnaround period that's going to take some time to show up. I thought it would happen a little sooner than now. It's already June. So it was our stock of the year last year, which means that our goals were for 2020. Now, we already hit our numbers, though, so this is actually our second crack at Victoria's Secret, because at Limited Brands, because they had a nice pop. Oh, look, it's on the thing we were talking about last week. See, what happened is we picked up this, and we cashed in there. We got back in. I think we took money again off the table here when we went back up to 35-ish, and then we got back in again. So where is Limited Brands on here? Hang on a second. Client portfolios. Butterfly long term, Butterfly 67, that's good. Long term 155, that's not so bad. LB. Yikes. Oops, alphabet. Wait a minute. There it is, okay. Yeah, so we came back in 921.18 on that. We came in 228 on the longs. So that's where we are. This is a deconstructed position that we've already cashed out part of, and now we're basically defensive with the $20 calls and the spread. So we're just waiting to see what happens. I don't remember if I said to buy back these calls or not, but I would buy back these calls, frankly, ahead of the earnings, because they're not going to help you much. Even if earnings tank, how much is $1.13 going to help you? But if they pop up, you're going to regret that you have these calls because you'd rather sell something better. So I would take this profit off the table and then see how earnings goes. And if earnings are worse, then you're going to sell some other calls and roll down. So it's not terrible. It's, in fact, look, it's only negative. This is only a few $1,000s down, this position right now. So it's not horrible. Let's see what happens. Look at Macy's, is much worse. Macy's is terrible. But again, it's another position we already bought back part of, so we'll see what happens. What else? Okay, so that's that. And so those earnings are tonight, so we'll see what happens. Let's see how our other portfolios are doing. I don't know what you call this. I mean, we're up, we're down, we're all over the place. It's oh, wrong thing. Money Talk portfolio 124, options portfolio 153. Yeah, they're all holding up okay. Short-term portfolio 644. Yeah, about what they're not much different than they were last week. So we shall see. We are just not getting enough of it. We're not getting enough of a downturn or enough of an upturn to make any difference at all. But if we keep being flat week after week after week, if we stay flat, then the time decay of all the options we sell starts kicking in force. But over the short run, none of this stuff matters. So we will see what happens. And so let's see how the market's doing at the moment. See, we're ticking up a little bit. I mean, the Fed's telling you they're not doing anything. It's going to be easy money for quite a while. Oil's pausing here, but I think we're going to catch us something into the weekend, so I'm not too worried about that one. Gold is down here. Silver, we took the money this morning, which is a good idea. Apple, we're down there. The dollar's down there. I think I really like natural gas down here. That's not the 19. It's the NGZ19 is the one that I like because it gives you a lot more time. Gives you the entire year to get it right. 285 is a crazy low price on natural gas. So I really, really like that one. That's the trade I like the most down here. And we'll see what happens. Let's see what else we talked about today. Not too much. So let's take a look at the last 2 days, basically. Oops. That's Tuesday. Here's today. Oh, wait. Tuesday's the day I talked about the stuff today. So we talked about gasoline, we talked about gasoline again, we talked about oil, then Trump went insane, and then we had to do the webinar. That was our whole day today. Now, since this is Tuesday's post, yesterday we talked about that the volume on SPY was very low, and this is where I look on that. I go SPY on Yahoo. As long as the thing you're measuring is consistent, you get an idea. It doesn't matter what it is. It just matters that you're consistently reading the same thing. Look at these volumes. I said that was going to happen. I can't believe how bad it was, though. 46, 35. I mean, today's not over yet, but 46 yesterday. That is incredibly low volume. Normally 100 used to be low. This whole year, we're barely touching 100. See how many? Look at this. This is going all the way back to January. See last year. Well, it's okay. No, last year in the summer we were low. Look at these. Wow, that was crazy low too. Look at the summer numbers. In the summer last year we were low. This time of year last year, May, this was, here's the holiday, May 27th. Okay, so coming into the holiday, 52, 61, 75, 56, right? That's your holiday traffic. And we were flat as a pancake all the way, like from May 22nd till mid-June, we were really flat. So then if you look up though now, oh shit, what were those numbers? So 50, 60, 75, 50. Okay, that was this week, last year. We're at 60, 45. So we're already below last year, which was really crazy low. Used to be 100, 150. That was a normal range for a day. We're like half of the volume we were a couple of years ago. It's crazy. And you can see it in the chat room too, though, because we're half the volume of chat. Like people just really lost interest in these markets, which is so weird because there's so much money to be made right now, and nobody's just reaching out and getting it. We have frankly so many trades that we just get tired of making trades. It's just these portfolios are basically getting full. I did start a new portfolio yesterday. Okay, well, let's get to that too. All right. So we're back to here. We went long on the futures yesterday. That worked out really well. The gasoline we talked about yesterday, and now it crashed now, but it was good yesterday. We had a nice pickup into here. So we took that already, and then when it came back down, we jumped in again this morning. Didn't do that. That's hurting us now. We'll see what happens for that. Gasoline. Yeah, here's my whole premise for why we like gasoline. Here's the UGA play that we took. Boeing popped up yesterday, is back down a bit today. Silver had a really nice pop. This is yesterday, and we were talking about it down here at 1430 something, 1435 in fact, and we got a nice pop to 1445 today. We took that money and ran because that's a $500 a contract, so that was nice. And then gold, of course, also popped and went about the same amount, so we made good money on both of those. Copper did good yesterday, but then fell apart really fast. So where is copper now? Oops, 5 minutes. Nope, can't see it. Anyway, so copper had that nice pop early in the morning, and then it completely has collapsed since then. I like copper down here. That's crazy. You know, that just shows that, and that's because of of these comments, the rare earth thing. I mean, if we're going to start that kind of crap, it's going to be a disaster with this trade war. So it's a dangerous trade, but long term, it's probably going to pay off on copper. But you got to be really in it for the long haul, because it's going to go up and down like crazy. Freeport McNamara is not doing any better than yesterday. Yesterday was 10.25. It's now 10.12. I like that trade. What else do we do? Okay, we talked about the bounces, and we're not. You know, are we below? We're below 2860 now on the S&P. Oh no, we're not. We're right at 2860. Okay, so we're in the same place we were yesterday. It's like so silly. 2860 is still black, and the rest of the guys are red, and the Dow is above 25.7, right? The Dow's still above 25.7. Yes, 25.8. So there's no change on the chart at all. And that's what this chart's good for. Is you want to see if there's a trend. There's no trend if you're in the same place. And I said today, we got to watch the 2860 line, see which way it goes, red or green. It's not going anywhere. It's still the same place. We're still at that line. All right, so then during chat, what did we talk about yesterday? We were watching our various things, gasoline, EMN we were looking at. We like to trade on that one. INGR not like, and well, good. See, I told you I told you I didn't like that. Down a lot. Vodafone we don't like either. Apple coffee had a nice pickup yesterday, and today it's iffy. I think we got out of that. Oh yeah, we killed that trade today too because that a profit. It just, you know, when you have a nice move in 2 days, we got out of coffee here, and now it went down 2 cents because this was a lot. When you make a lot of money, you get out, take the money, and wait for the next trade. There's always another trade. That's the problem. You guys, you get into a trade and you act like there's never going to be another trade, and you want more and more money out of the same trade. It's like, just take the easy money, and then wait for the next trade that will give you easy money. They always come along. All right, we talked about Signet, which I'm very, we're worried about Signet because De Beers had terrible report. 25% drop in diamond sales. So that's not good for Signet Jewelers. They're they're a jeweler, they have other stuff, but it's not good when you see that kind of drop in diamonds. These artificial diamonds are killing this industry. Now, ultimately, I think the problem is though that a jeweler like Signet, they don't really carry the machine-made diamonds. They're going to have to start. But I think the problem is that De Beers sort of threatens people not to carry them. But it's unrealistic. I mean, they can't not carry them. They're so much cheaper, and people want them. They're cheaper and better. They're perfect diamonds for the price. For like a quarter of the price of a regular diamond, you get for the quarter of the price of a normal diamond that you would get for your ring, like with slight flaws in it, you get a completely flawless diamond like you would find in Tiffany's. You can't compete with that. This is not realistic. It's just De Beers is trying to protect their market share, but they're a dead company. It's a dead industry. Just people aren't going to pay that much for diamonds when there's an alternative. Here's some news we don't care about. We care about it when it happens. We don't care about it a day later. It's not new anymore. Talks about EXPI. ENPH just keeps going up and up. Overstock is terrible. Canopy growth. Oh yeah, we were talking about the marijuana and we're talking about canopy growth and how the marijuana industry is going. And I gave an example of like what we're doing with the PSW Investments invested in a marijuana company, and explain like this is what you got to look for in these companies. But by the time they go public, they're really not worth it anymore. The real bargains to be had at the small company end. That's why we're picking them up, because they're just incredible. You can buy in at the growth stage of these small companies when you've got that kind of demand for public companies. It's like being early in the dot-com boom. It's like just really fantastic if you can get involved in these companies early on. And then for our new portfolio, which is for the Hemp Boca radio show we own Hemp Boca, PSW Investments, we have a piece of it. So we're going to be on a regular basis on the radio show that they have once a week. We're not going to be on once a week, we're going to be on once a month maybe. Anyway, so we're making a portfolio for them the same way we have a Money Talk portfolio, we're going to have a Hemp Boca portfolio. And this is the first trade we're putting in it, which is the MJ ETF. It isn't moving anywhere, so you can get most of these prices. And on this play, we're selling 5 of the 2021 $30 puts. So it's a brand new portfolio. You guys, you asked for a brand new portfolio from scratch, basically looking at about a $50,000 base. So we're going to be trading things that fit in a $50,000 portfolio. We're going to sell 5 of the 2021 $30 puts for $625. We're going to buy 10 of the 25 calls for $10.50 and sell 10 of the 35 calls for $6. I like MJ because of the huge premiums. We're netting in for $13.75 on a $10,000 spread. So 25 to 35 times 10 is $10,000 spread. And so we're netting in for $13.75. That means we have an 86.25 upside, 627% in 18 months. If MJ gets to 35, see 35, that's our target. So if it goes from 34 to 35 in 18 months, and has to hold it, it has to be there in 18 months. It can't just go there and come back. But if it goes to 35 in 18 months, we are going to make 627%. And I think that we're going to be over 50 in 18 months. But this is just a nice conservative play that would shock me if it doesn't work. So it's the kind of thing I would put in a small $50,000 portfolio. And believe me, you know, I keep saying my kids' college account is cash. If I could make these kind of plays with my kids' college accounts, I wouldn't be in cash. I'd be making, I'd have them with $1 million college account. But you can't do this. I can only put my money in a very limited selection of ETFs in the tax-free plan that we have for them. So I'd rather be in cash than be constrained to these crappy portfolios with no hedges that they have you in. But this is what I would do with cash I care about. I would put it into trades like this. Because what's your worst case scenario? First of all, the margin on this is only $1,500, so that's great. So it's not a margin intensive trade. I believe the margin should be higher. I think there's a mistake in that. I think that the compliance people that Thinkorswim or whoever, it's just I think that they're not treating this as seriously as they should. Because you're only at 34, and the $30 puts only put you in for well, the margin is actually $3, so it's a 10% margin basically at that price. Because the margin is 3, it's $1,500 on 5. It's not $1,500 on 10. So still, you're paying $3 a share for margin. I don't find that too much at all. So you have a limited. It's a very, very small use of your portfolio. You're only using a tiny bit of cash. So you're in very good shape. The whole thing is going to set you back like not even 10% of your portfolio to make this trade. We're probably not going to have more than 10 fills in the portfolio in the first place. So, it'll be like the Money Talk portfolio. There's only like 6-7 positions in the Money Talk portfolio. This will end up like that. And the Money Talk portfolio made 100% easy. So, and it's trades like this. And again, these are the kind of trades we put in the Money Talk portfolio. It's supposed to make 627%, but you're not going to, realistically, things happen. Not all of them go well. So the Money Talk portfolio is up about 120-something%, not 600%, because not every trade wins. All right, so that's our trade. So that's our brand new portfolio. So for all of you who are complaining that we haven't, that they missed out on new portfolios or whatever, here is one. Starting from scratch, $50,000. Here's our first trade. All right, and that's going to be called the Hemp Boca portfolio, and I'll put that together very. Next time you do a review, we'll have it up as one of our portfolios. So rather than getting out of the portfolios like I really wanted to, I'm adding to the portfolios, which I'm probably going to regret down the road. All right, any final questions before we log off? Let's see. Ooh, A big question. Hang on. JC says, regarding Eastman Chemicals, Thinkorswim only shows options to December. Ditto for the NASDAQ site. The trade you posted, I made a mistake with 2021. I wrote that after. I meant December. When I went to the end. So what I, here's what I'm doing. Because I'm in chat, and I go EMN. So I go EMN, and oh well, on my main system, this isn't my main system. On my main system, everything's open. So I reflexively go to the bottom, and I just wasn't paying attention, and I just assumed it was 2021. I just flipped it. That's what I do. I take one motion. I go like boom. I open it up. I go to the bottom of the screen, and then I start looking at the prices. And I thought it was a regular stock that went to 2021, but it didn't. So, but the numbers I quoted were the right ones. There is no 2021. I was talking about the December spread. So I like that, and it was a very conservative spread. I forgot what the numbers were, but I think we were in the money and just basically betting that it would stay in the money. So that's still, I stand by that spread, except that it is December and not 2021. And that was something from yesterday, guys. All right, so the markets are creeping back up. So things are not dire yet, even though we have no government, and even though the president is insane and on the run from the law being Congress. So we'll see how that works out. But apparently, you don't need a government. This country seems to function fine when nothing is happening in government. So because there have been no laws passed and no bills, and nothing has happened and nothing is getting done. And who cares? Market's fine. So don't worry about it. So we'll see what happens. And like I said, I think there's been a big mistake in the inventory report. We'll have to wait and see what the official note is on that, but it seems to me that these are much more bullish numbers than they seem. So in oil, if it comes back down, especially if it tests 60, I'd be very gung-ho to pick up an oil contract here. 61 is fine too, though. And I would just stay in. I mean, I'd take the risk on 61 down to 60, and 60 I would stop out if it can't hold that. Gasoline, I'm going to be very upset if it does fall back lower, but what is my average? It's I'm on the wrong one though. It's not the same contract. My contract is N19, and I'm still down $1,800. No, $1,600 overall, which is a lot better than 27 before. So remember what I said? Had I doubled down, had I added one more contract, my break even would have been here. I would have probably gotten out by now because I'd only be down about probably under $1,000. So I would certainly lighten back up at this point if I had had a chance to do it. Now I'm going to wait and see if we come all the way. So now we have to go down $2,700 before I add a contract. But if we do, I will add another contract because of my premise that next week we'll have more of a draw than we had this week. So we'll see what happens. We'll have to do it again next week. Okay. So everybody have a great holiday weekend, and we will see how these things turn out next week. All right. Thanks.